What is up, everybody? Welcome, welcome, welcome. Yes, it is actually Tuesday, and we're doing Tuesdays with Turbo on Tuesday. I know it kind of blows my mind as well, but it did fit in the schedule this week to go ahead and get this done on Tuesday. And for those of you that do not know, welcome. This is Tuesdays with Turbo, where I like to talk about insurance, break down coverages, give you as much advice as I can, because let's be honest, insurance is its own language, so let me help you. And for those of you who don't know, my name is Ryan Turbo Jackson. I am your insurance resource. And today, if you remember the last few episodes, last month was Life Insurance Awareness Month. So we're going to switch gears a little bit here, and we're going to talk about auto insurance. I know everyone's most favorite topic to talk about. But these are some myths that not only do we hear, and like the description of the video says, we hear a lot of different things come into the office, whether it's folks walking in, calling, emailing. I mean, we get quite a slew of questions, which is awesome. I would much rather someone use us as a resource as opposed to just assuming. And I've said this time and time again, if one person has a question, if you have a question, I guarantee someone else has it too. So, and again, there aren't any dumb questions. So I believe I've done maybe one or two of these in the past, where I kind of just did insurance myths, but today we're going to talk about auto insurance in particular. So let's jump right into this with myth number one. Red cars are more expensive to insure. That's not the case. Insurance companies don't charge based on color, factors like make, model, age of the vehicle, they don't charge based on color, but they do charge for factors like make, model, age of the vehicle, and driving history. And also your insurance score does go into account, as well as where you're located. So just because you drive a red car, and this even goes back to when I was turning 16 and 17 years old, it was a common myth that, I had not only my parents, but parents of my friends tell me that you never want to purchase a vehicle that has the same color as a bullseye. So white, red, and blue. Those just seem to attract, weirdness, attract different things, and corresponding are more expensive to insure, which that is not the case at all. Number two myth, having state required minimum liability is all you need. Now, they call it's a minimum for a reason, because there's a lot of things. I mean, if you think about it, you're driving a, multiple ton projectile. Okay. A lot of things can happen. So when it's state minimum, that's just the bare bones. And here in Michigan, with the state minimum, there's at least some medical coverage, unless you're able to opt out, which we've talked about. You have to have Medicare Part A and B, and you let Medicare take care of any medical expenses if there is an auto accident. But other than that, there's just liability. And one of the things that was attached with the no fault reform, that's when we got the opt out, the other levels of medical coverage, there was an increase to the minimum bodily injury limits. And if we've talked about bodily injury limits before, but that's basically your liability coverage. I know it sounds weird, bodily injury, why don't they just call it liability? That I really can't tell you. But that's what, and it went from 20,000 per person to 40,000 per person. Now it's 50,000 per person, 100,000 per occurrence. Now, if you can imagine, or if you've been in any legal proceedings, $50,000 and $100,000 don't really get you that far. And if the judge, grants any settlements there, that all comes out of that too. And if your liability coverage is maxed out, that comes out of your pocket. So and I've stressed this time and time again, liability coverage is some of the cheapest coverage you can buy. So when you're trying to get your auto insurance down to as low as you can, sometimes it's not better to nickel and dime yourself to death when it comes to these big coverages. So is minimum coverage enough? No, no. There's always, like I said, there's always, and another coverage that a lot of folks tend to overlook or tend to just put this down at the minimum is the underinsured and uninsured motorist coverage. And when we're talking about those two and the liability, the bodily injury limits in particular, you're talking about with the three of those at a 250,000 per person, 500,000 per occurrence limit, you might be looking at $20 a year. So that is something, like I said, it's pennies on the dollar considering the coverage you get. So that is minimum coverage enough? I always recommend no. No, and that's not just because I'm a salesperson. That's just because it just really, for what you're getting, it doesn't make sense to me to leave that type of coverage off. Let's see here. Myth number 3: older cars don't need comprehensive insurance. If you drive an older car, you can skip comprehensive or collision coverage, which this really isn't a myth. Is it? Do I recommend it? No, especially where we live. And I don't know. And when it comes to older cars or older vehicles, it's pretty much on a case-by-case basis. So it's not something that I can just, paint with a broad stroke here and just say, if it's 10 years old, it's not worth keeping comprehensive and collision coverage on it. It's more or less the case of let's get in, see how much it costs. And at a minimum, I always recommend that folks stick with at least some comprehensive coverage. What is comprehensive coverage? Well, we live in deer country. We live, if you've looked at, the weather, the trees, trees and limbs falling, if the vehicle is vandalized or stolen, at least you have some sort of coverage like that. And if we're talking about nickels and dimes here, 99% of the time, the collision coverage on your policy is the more expensive of the two. So at least keeping some comprehensive on there, because like I said, that's the vast majority of claims. Like I said, we here in Marcellus, Michigan, or any of the surrounding Southwest Lower Michigan, we have deer running around. Not so many right now, but historically, deer versus car claims are some of the most common. And at least if they do total the vehicle out, at least you'll get blue book value for it. You'll have something to either put a down payment on a new vehicle or buy something new. So again, one of those nickel and dime type things. 9 times out of 10, the comprehensive coverage is vastly more inexpensive than the collision coverage. So it's one of those things where if you do have like a 2014 and it's still really in good shape, doesn't have a whole doesn't have 300,000 miles on it, I would that'd be something that I would at minimum keep comprehensive on, just because it's harder to. And we see, unfortunately, we see this quite often, is someone will remove the comprehensive and collision coverage, and 60 days later, they call and they're like, well, do I have coverage? And it's like, no, we actually removed that, remember? So it's one of those, am I superstitious when it comes to stuff like this? Maybe a little bit, but like I said, in the grand scheme of things, I always recommend at least keeping comp on your vehicles. Myth number 4: your insurance covers you for anything in your car. The myth here is if you're driving someone else's car, your insurance will cover everything. That's not necessarily the case. Usually the owners, whoever owns the vehicle, their coverage goes with you as the driver. So just kind of keep in mind, insurance typically follows the car, not the driver. Myth number 5: personal auto coverage covers business use. The myth here is if you're using your car for business, like delivering food or driving rideshare, personal auto insurance covers you. The fact here is most personal auto policies don't cover business use. You need a commercial or rideshare policy for proper coverage. Now, this is very, very company dependent. We have talked about, you know, deliveries, whether it's Uber Eats or Uber itself, any of those type of situations. It's to the point nowadays that most companies have an endorsement you can put on that will give you coverage during the hours of operation, whether it's delivery or, like I said, a Lyft or Uber type situation. So when it comes to those, I mean, granted, like I said, it's company by company, but most of the time we can just put an endorsement on to make sure you're covered. And the reason being is because I've went over this in other videos, but there's 3 stages when it comes to a ride share. There's prior to getting a call, on your way to getting a call, while you're on the call. So there's three separate stages, and whichever company you work for only provides coverage for when you're actually driving said person or something of that matter. Now, so this endorsement would fill the gaps between the 3 stages to make sure that there's coverage at all stages. And when it comes to delivery, I mean, it's getting to the point now, again, that most companies do offer that endorsement. But if your company doesn't, then yes, it would something that would need to be under a business policy. And we see this a lot with, if you're in sales, or if you're a realtor, or there's many other things where you do use the vehicle, some for personal, some for business, and it comes down to who the vehicle is titled to and the amount of use. And again, this is something that if you are in this situation, highly recommend that you do talk to your agent, because every company handles the situation like that differently. Myth number 6, we're halfway there, ladies and gentlemen. You only need insurance if you're at fault. The myth here is you only need to worry about having insurance if you caused the accident. The fact here is, even if you're not at fault, insurance is critical to protect you from uninsured drivers or medical costs. And that is 100% true. And it's kind of hard to get insurance on something that's happened in the past. So, and again, you have to have auto insurance by law here in Michigan anyway. So it wouldn't behoove you to drive without insurance, then get some insurance after already, hitting something, injuring somebody, because that's not how it works. That's not how it works. Myth number 7, we get this one a lot. Full coverage means everything is covered. Now, let me tell you a little secret here, is that most insurance industry folks hate the term full coverage. Why? Because when you use full coverage, it means everything is covered, which is not the case. There is not a single auto policy in existence that covers absolutely 100% everything. Let me read you the fact here. Full coverage usually refers to a combination of liability, collision, and comprehensive, but it doesn't cover everything. Things like roadside assistance or rental reimbursement may not be included, as well as one of the first things that comes to my mind when someone says full coverage is, and we get this a lot, whether it's on the home or the auto side, is repairs. When someone says full coverage, they're like, all right, well, if I hit a pothole and the tire needs to be fixed or replaced, that should be covered. No, that's normal wear and tear. And that's just one of the many examples we get. So be very careful when we're talking about full coverage, because full coverage doesn't really exist. It's just something that we kind of, as a society, have adopted, but there really is no such thing as full coverage. Myth number 8, your credit score doesn't impact your auto rates. The myth here is credit score has nothing to do with how much you pay for auto insurance. This is incorrect. This is very incorrect, and we've talked about this, but I'll kind of give you a refresher here. Is your auto insurance fully dependent on your credit score? And the answer to that is no. But every insurance company assigns you an insurance score. That insurance score is one of the factors that is used to calculate your insurance premium. So when your credit score is lower, your your insurance score will not be as good. Therefore, you're going to pay more. Now you might be saying to yourself, "Well, Ryan, why would my credit have anything to do with this?" Well, you're still paying. Auto insurance is one of your bills. I'm not going to say it's a debt, but it's definitely one of your bills. And your credit score has a lot to do with your history of paying your bills on time or late, or just not paying them at all. So the insurance companies use that to actually, like I said, put together this insurance score. And different companies assign, weigh different factors more heavily, less heavily than others when it does come to this insurance score. And they're calculated completely different. So this is something that is completely company dependent. But the vast majority of the time, when it comes to your insurance score, your credit score is part of it, as well as your how long you've had insurance and your claims history. So those are the three biggies with every company. And another question we get to kind of piggyback off this one is, well, if I do shop my insurance around, will it affect my credit score? And the answer here is no. When we obtain the or we when I run a quote with the companies I work with, the companies will look at your credit score. It's not a hard pull or an inquiry, as like you're trying to get a car loan, a credit card, or a mortgage or something like that. Those are inquiries or hard pulls, whereas we're just taking a peek. We just want, the insurance companies just want to see that number. They don't really care about, getting that far into the weeds with it. So yes, it does affect your credit score or your premium, but will shopping your insurance cause your credit score to go down? The answer here is no. So you kind of get a twofer. You get an 8A and an 8B on that one. Number 9, the older you get, the more you pay. The myth here is insurance premiums only increase with age. And the fact here, rates go down as drivers age and gain more experience, but this trend can reverse once drivers reach their senior years when risk assessment rise. Now, this is, I'm going to say it's kind of a myth because this is completely company dependent. Some companies prefer to deal with youthful drivers. Some companies prefer to deal with elderly drivers. Sometimes it really doesn't matter. So again, most of the time it comes down to how long you've had your insurance, your claims history, as well as your, the insurance score we just talked about. So, but yeah, this is 100% company dependent. So I'm going to say this is kind of a myth, but it is also kind of true. It's kind of true. So kind of keep that in mind when you're, because I've worked with companies that that charge more for youthful drivers, but are more forgiving with elderly drivers. And I've dealt with them that they charge more heavily for elderly drivers than they do youthful drivers. And you can kind of see why. Youthful drivers, you don't have the experience. You make mistakes. We all have. And then elderly drivers, your abilities tend to diminish, as well as eyesight, reaction time, everything like that. So you can kind of see why. But now, when these quote unquote elderly drivers, every company has a different threshold with that. Some of them 70, 75, 65. So again, very company dependent. And lastly, insurance companies always total a car after an accident. The myth here is if your car is in a bad accident, it's automatically totaled. The fact here is a car can only be totaled if the cost to repair it exceeds its market value. In many cases, vehicles are repairable even after significant damage. And I don't know if you've went to purchase even a used vehicle nowadays. The price of them are just through the roof. So keep in mind when you're having this conversation is right now it takes more damage to total a vehicle than it did in the past, just because Even used vehicles are more expensive, and if you've priced new vehicles, they're even worse. So kind of keep that in mind, that yes, this is not a myth, excuse me, this is a myth. They don't total it for everything, but again, as we kind of move through this, and the economy being what it is, as it sits right now, it takes more damage to total a vehicle than it did in the past. So generally, that is, that's kind of the case there. And lastly, it's always good to kind of get on here and debunk things like this, because we get all the time where, well, I was reading on the internet, which is, yeah, and I'm putting this out on the internet, so I don't know how silly that makes me, but anyone can write anything on the internet. Or I saw this on TV, or this and that. And especially with the TV thing where we live, if you still have DirecTV or Dish, which like I do because we live in the boonies, we get Indiana channels. So when you see the news, like channel 16, channel 22, 28, those are all out of South Bend. So when it comes to insurance stuff, in particularly auto insurance, that really doesn't pertain to us. Every state has their own insurance regulations, insurance rules. In particular, here in Michigan, we're a no-fault state. Indiana, for instance, is not. So do the coverages still work the same? Yeah, for the most part, but we've got into the whole medical thing. Ours is way different than Indiana's. We have different options for collision coverage where Indiana does not. So there are some vast differences. So kind of keep that in mind when you're either listening to the radio, watching TV, reading the newspaper, or when you're reading it on the internet. See where the writer is from, see where the publication is from, before you kind of start jumping to these conclusions. Or just give us a call. We are always here to help answer any questions, and this is going out to whether you're a client of ours or not. If you have any questions about anything, it could be about this video or any other videos in the past, you can comment on this video, you can shoot me a Facebook message, you can give the office a call, or this is my direct email. I am more than happy to help each and every one of you out with your insurance questions or situations. So that's it, ladies and gentlemen. That is the top 10 auto myths debunked for you right here live. Let me know if there's any other myths you would like me to debunk, or any other video ideas, because I would love to. I mean, this is why I do this, is to help you guys, help you know what you're buying, and help you know if you have the best coverage available and for the best price. So let me know your thoughts. Like I said, let me know if there's any questions I can help you with, and I will see you again next week, ladies and gentlemen, hopefully again on Tuesday.